Boom. All right, ladies and gentlemen, we got a good show for you guys today. You want to recession-proof your wealth with legal industry investment? Sounds interesting. Don't know what it is? Stay tuned. Let's get this one started. Here we go.
Shut up and sit down.
Look, a business can give you everything you want in life. Prestige, wealth, freedom. It can also take everything away from you. This show is for those who are willing to take that risk. These are the real life stories of entrepreneurs. But before we start, I have one small favor to ask. Please leave a comment. It can be advice, critiques, tips, feedback, or share this with someone because your engagement is the most valuable and most powerful form of social currency. So thank you, and welcome to another episode of Business Bros. Business Bros, tired of stock market swings and traditional real estate headaches? Well, today's guest has cracked the code on recession-resilient returns by diving deep into overlooked, high-growth investments from litigation funding to tax-efficient wealth strategies. Let's get this one started. Please welcome to the show, Mr. Patrick Garand. All right, Patrick, welcome to the show.
Hey, glad to be here, man. That was quite an awesome intro you got there.
Thank you. It's all about you because you're about to share some unique stuff with us. We all want to get into the passive game when it comes to investing, and yet we don't ever feel like we find the answer there. Everything doesn't really seem to be very passive. Give me a little bit of background for yourself. How'd you get started? What are the basics here? What did you do to find this type of investment?
Well, like many of your listeners, as a hardworking professional out in corporate America, I did machine design, automation, and robotics. I was looking for a way to diversify at essentially high tech. I got some advice to invest in real estate. In fact, the founder of the tech firm I was working for, 30-year titan in the industry, said he makes all his money in high tech and dumps it in real estate. His only regret was not putting more sooner. So that's what got me down the path, and it's been a wild ride. Had some wins and some losses along the way. But on the other side of it, like you said, did well, entrepreneur, got several businesses now, and things are going along well.
Tell me a little bit about that litigation stuff. What is it, and why did you decide to kind of shift your, maybe the assets that you were investing in, kind of go into this different type of investment strategy?
Well, my first foray into investing was actually pre 2009 and 10. So I lost everything in the subprime mortgage collapse of real estate. So I learned firsthand how brutally it can be when you've done everything you think is right, but then the market just falls apart and the creditors come after you. And it was a really tough time for a lot of people, me included. So I learned a couple of things. I mean, be more patient and to diversify, not just into one market where fundamentals in that market can ride crazy swings like the stock market, real estate, oil and gas. You need to be diversified across multiple different asset classes so that you can build more resilience. And that's what leads me into these things, these kind of novel, kind of odd kind of things people don't think about. People don't think about, oh, let's go hang out with attorneys every day. Let's go partner with attorneys. But it turns out that doctors, attorneys, CPA firms, all those guys, those are in industries which are needed in good times and in bad times. They're fairly resilient and they have steady growth.
Tell me about litigation funding solutions. What is that? Because when I was reading some of your profile stuff, I was like, wait, you can invest in stuff like this? I didn't even know that was an option. And I 100% agree with you. Talking to different professionals in different industries does open up new opportunities when you hear the problems or the issues that are surrounding those industries. So being a lawyer and all, what is litigation funding?
Well, so similar to, just a quick analogy, similar to our real estate debt fund, when we have a real estate fund, when we're lending to real estate operators that want to buy or improve properties to give housing to tenants. There's also legal operators. There's individuals in the legal industry. And these individuals, some of them are working on a contingency fee basis, meaning their clients, again, they're trying to provide access to justice for those that can't afford it. So they're working on a contingency fee, contingent upon settlement, and then they make their money on the back end, kind of like a sale event, right? And so they need somebody to come along and lend to them, to help them, either just like a real estate operator wants to buy or improve property. They may need to acquire clients or claimants, ones that are similar to the cases that they're currently pursuing, that help them look more mean and helps settle quicker with the big bad defendant that they're going against, or they need operating expenses to get it across the finish line to the exit, to the settlement. And so, just like in real estate, it's an asset-backed lending strategy where we can value real estate with an appraiser, where you can value corporate assets, law firm valuation specialists. And then you can lend on a loan to value, just like we do in real estate. Make sure they have skin in the game and a track record and resources. And we can put a lien against them, just like we do in real estate. Give a trust, right? We put a UCC1 filing, do a credit agreement. It's like any kind of asset-backed lending strategy. It's just in a different industry. It just happens to be that industry is much more stable than real estate, stock market, oil and gas, and some others.
Who's the ideal investor for something like this? Because it sounds very niche. It sounds very unique. It's not the one that I read in Rich Dad Poor Dad, right? He didn't tell me to go invest in some like litigation funds. He said buy real estate, and not that that's a bad thing, but I mean, you saw what happened 2008, 2009. Like things go rough. How do you find out more about this? Who can be an investor in something like this?
Well, so like any kind of asset class, whether it be oil and gas or venture capital, you can invest super early on for high risks and lose it all like I did, or be a seed funder in a company, or be an oil and gas wildcat driller and try and make it rich or lose it all. Or you can be really late stage, where you're investing in where you're proven oil wells or proven companies or legal cases, which are near settlement in our case. We call it late staged. And so what are our cases? For example, we're working on cases where there's a big bad mean defendant, an organization or the US government or the LA Juvenile Detention Center. We just won a case where we contributed to the attorneys who were providing access to justice for sexual assault victims, that the LA Juvenile Detention Center just settled to give them relief in the billions of dollars, for example. Or Camp Lejeune, it's a military or Marine base where our soldiers and their families went to go train to go to war, and they were fed contaminated water for 17 years. And it's proven that caused certain illnesses. And now there's a grid saying, based on how long you were there and what your illness is, here's your settlement. So we fund thousands of individuals that were harmed inside of our diversified fund. And so you can be in these kind of diversified portfolios, which is exactly what ours is, kind of a large exposure to a bunch of different late stage settlements that provide great returns.
And as an investor who comes into this space, it's crazy. I know somebody who's going through that whole Camp Lejeune thing, got Parkinson's, got it really early on stage, and the litigation is there. So I know offhand, in those talks, what kind of settlements they're looking for. So if I'm understanding you correctly, the outside investor is funding some of these settlements until the court finally closes it out, and then whoever is being sued actually does the payment, and then the investor can get paid off. Walk me through that structure.
Well, what you just described would be more like an accounts receivable, where the settlement's there and then you're kind of factoring it or account. What we're doing is actually typically pre-settlement. So before the judge gavels down for most of our cases, or there's a judgment, whatever it is, before that, we're typically engaging when they're already in settlement negotiations, just like in Camp Lejeune. You can settle right now for the grid, but they're in negotiations for larger settlement amounts, and there's the latter end of the trials going on. And so we'll contribute not to the individuals. We won't contribute to a settlement. We'll actually lend in a portfolio of cases that attorneys have. So we're actually lending to attorneys in this particular case. And we participate in a preferred position typically from the settlements that the attorney gets. We participate in a return, usually before them, and then at kind of a graduated scale, depending upon how well the cases do. So it's not like debt, like in a real estate deal, where it's just principal and interest, right? And you're at 60, 70, 80% loan to value. We're more like 10, 20, 30% loan to value. And we'll get typically a return of capital first before the borrower gets anything, like a principal return. But then our returns kind of scale up the more that the portfolio cases outperforms.
It's not bad though. I mean, it's great. It's a great way to park some money if you needed to do that. Who's your ideal client for something like this? Are you looking for accredited investors, minimum investments? What's the criteria for somebody who's interested in maybe having an alternate investment opportunity?
So Passive Investing Mastery is our company. educate and sponsor on completely different non-correlated alternatives for building out a well-balanced, secure portfolio. And all of our affiliate funds are for accredited investors. You got to reach that 200K or 300K income when combined with your spouse, or $1 million in net worth, not including your personal residence. Now, we know a lot of non-accredited investor sponsors, but they're not going to be here right now talking about it, because if you have an investment available to non-accredited investors, they can't be on a stage talking about it. They actually can't solicit it. So it takes us, some of the people out there trailblazing, publicly advertising these types of investments to get even awareness of the availability of this. But we can certainly point you in other directions if you're not accredited. Our minimums have always been $100,000. So we're looking for those people willing to put some cash. Now, it's not like a real estate deal where once you invest, it's like it's nothing or little dribble of cash flow until a pop at the end. In a diversified portfolio, you have thousands of cases, right? So we're looking at 3-5 years where you see in the middle, you see lots of those settling, and at the end, it's sort of the end game, right? Where there's not much happening. So people got to put on a little bit different thinking cap, where it's not steady Eddie distributions like in real estate, where there's a resident sitting there paying rent and you got to wait for the big payout. In litigation funding, there is no resident paying rent. There's somebody who's harmed that can't afford it, and it's the attorney that needs rent and operating expenses. But the big payout happens in the middle because the settlements actually happen through the middle of the fund. So it's people looking for not necessarily predictable returns, which I think a lot of real estate operators are out there falsifying the predictability of returns. And we just saw that, where it's this cash flow, this exit time frame, well, all that went out the window during COVID, right? Where it's not the predictability necessarily of this is my steady Eddie predictable income, like our debt fund can do, but this is a projected amount of income per quarter over the subsequent few years that, most importantly, isn't going to be affected or rise and fall with the rest of my portfolio. Real estate collapses, stock portfolio takes a hit, oil and gas has major problems. Again, then I've got a slice of my pie. I get an allocation into the legal industry somewhere that isn't driven by those market fundamentals.
Now, there's, by the way, I agree with you. You can make Excel returns look amazing in almost any industry, but the reality doesn't always pan out that way, as we saw in the real estate game. When it comes to the litigation, I mean, you mentioned some of these cases, and the time frame that it would take to kind of close these things, but how are you choosing which file to go after? Like, there's so many people getting sued in California. There's so many different types of big what they call them, class action lawsuits, things like that are going on. How do you pick a winner? How do you know which one is going to go where you get to settlement or versus not? I mean, obviously it's an investment, there's always risk to everything, but you want to minimize that. What are you guys doing to kind of look at the different cases?
Well, it really comes along the continuum, like I was mentioning earlier. Every investment can be a huge gamble for massive wins. And I know that firsthand after losing everything in pre-development in 2009 and 10. Or you can invest when things are much more certain. And then in the legal industry, it already is the case that 90% of civil lawsuits settle, right? It's not typically that when things go to trial, they're not going to settle. It's very expensive to go through the court systems. People don't like going through all of that and going through appeal after appeal after appeal. People traditionally like to figure out a way to avoid that litigation process. But some things do go to court, right? Some things don't get settled. However, if you're in a case like we're talking about, can't believe units, about as certain as it can be. The defendants, the U.S. government, they've opened up the U.S. Treasury fund, judgment fund, in order to pay it bottomless, essentially. Already established kind of like your minimum immediate payouts. Ones like that were in with the sexual assault, there's lots of other cases out there. And we invested very close to the end to help an attorney increase their docket or their claimants towards the end, where they're already discussing settlement amounts. So there's lots of other settlements in similar sort of situations in other jurisdictions, or in not just with the government, but other organizations where they covered it up. So you have a clear way to underwrite the value of these things. And you see that they're moving forward. This one thing about the U.S. government is that they trudge along. Other cases like toxic baby formula, NEC baby formula is horrible cases. Other cases that we're involved in are Suboxone cases. There's some acetaminophen cases in there. PFAS. These are the forever chemicals, right? Roundup or paraquat. That's when, Bayer, now was Monsanto, told everybody that Roundup is safe. And here's the EPA reports that have since been retracted. And there's lots of settlements already out there. Well, we've got a couple hundred individuals that are in the Roundup cases that we're helping the attorney provide access to justice to get settlements. So it's not a matter of like us picking and choosing winners or losers. It's a matter of us choosing allocations into investments, which we're not going to make 100x returns, right? We're not going to, and we're just before essentially it gavels down, just before a judgment for a settlement typically, but we can see very clearly where it's headed. And so there's no guarantees, but in a large diversified portfolio, you've hedged your risk. Thousands of lawsuits and lots of different cases.
Minimizing the risk. And let's face it, for the most part, a lot of investors are investing for that return. Obviously, I want my principal back. I want to make some interest. That's the whole point of investing. However, there are many investors who don't always chase the returns. They're looking for more of a tax efficient way of investing. Maybe they're already paying a lot in taxes. They got to find ways to kind of, put money aside in a way that the government's not going to dip their hands into it, or that at least they can minimize the tax burden that they're going to pay. You got, and you guys talk about that. Can you share one or two ways to help, how you guys help clients kind of minimize their taxes but maximize their growth?
Well, everybody's tax situation is a little bit different, and I'm not an accountant, a financial planner, attorney, so I can't give accounting, financial, or legal advice. But if you go, I have a document. It's called Invest with Patrick. Go to investwithpatrick.com, and on that it has Patrick's favorite alternatives for you to immediately invest in to start building more security, non-correlated ones that will build out more pillars of your wealth away from this instability of any particular market. And so that on there, I talk about a number of different opportunities, both in real estate and energy. And the government does incentivize people to house, feed, and energize America, right? They pay people to do these things because they need us to. Our government doesn't go drill all the wells, build all the homes, and feed all the people. They need the public sector to do that, right? The private sector to do that. So there's a number of different investments that you can do in those areas. Our acquisitions fund, we have two opportunistic funds, one in commercial real estate debt, one in commercial real estate acquisitions. Our acquisitions funds has pretty significant tax advantages, which a lot of our investors take advantage of. We're able to offset income. We've done oil and gas. It's done similar things. If you're interested in other more radical things, our platform, Passive Investing Mastery, we educate on lots of strategies, and there's a number of different kind of unique and novel ways that you can get into other kinds of tax solutions, but they're all specific to individuals. And so, if that's somebody's looking for, give me a call, set up a meeting at passiveinvestingmastery.com, and we can have a chat. And if we're not the right stop, I can get you pointed in the right direction.
And that's the thing about taxes. Everybody's different. We happen to be recording today when the big beautiful bill was passed, and so and it's funny because I stroll down Facebook or Instagram or wherever, and you're hearing both sides. People who are like, "This is never going to help me," and other people are like, "Yes, the SALT credit went up, SALT tax deduction went up." Like all kinds of different interpretations of what happens, but everybody's tax situation is going to be different. So I 100% agree with you. However, there's always misconceptions when it comes to diversified investments. What are some of the most common misconceptions that people have about these alternative investments? And you talked about passive investing mastery.com, where you have a lot of the education. How do you help people overcome these misconceptions?
Well, I think the problem really stems in that our society educates very poorly in financial matters. And I was a machine design, automation, robotics engineer. All I knew about was my 401k, maybe some high-tech stocks, until somebody started pulling me and being like, "Wake up, man, there's this whole world." And the whole reason we created our Alternative Investing Mastery series, every 2 weeks, bring completely different strategies, different asset classes out there, and panels of people to talk about them, is because I want to do that blue ocean approach. I'm in Hawaii, I see a lot of ocean. I'm going to do that blue ocean approach of just showing everybody my whole hand and the whole deck of every other way to invest. And because people, they don't want to just jump out into the desert, even if they know, look, I think it's better to diversify. There's a fear. They need a tribe. They need somebody to educate them, because we're tribal individuals. And so people don't want to go into the forest. They don't want to go in the desert by themselves. So what I always say is you really need to join groups like mine or like this that educate you and get physically in front of people on a monthly basis. Do one passive step a day. While you're washing dishes, driving a car, going on a run in the mornings like I do, listen to podcasts, educational webinars. You'll start to hear patterns. Things will become more familiar to you as you physically meet people and get to build friendships with people that are already doing and being these things. You'll start to feel more confident. And I think if you grow into that, set up calls with people like us that are on these shows, let us help because we've been down the roads. Get one of my free books. I've lost it all, made it back, done all kinds of crazy stuff investing, and learn about these stories, and it'll help you along your journey. Ultimately, how it ends up playing out is people live their whole lives in fear because the news does a great job of always predicting the collapse of the economy at all times. Yeah, and me as an engineer, I'm not immune to that. I'm a calculated risk type guy. And when you look at, like, we just got done with a pandemic, highly likely to cause a recession on its own. Interest rate hikes, highly likely to cause it. That alone. Trade war, that alone caused major recession issues. With 2 proxy wars and a real war now with Iran, really likely to cause recession issues. Wow, the world's biggest economies are betting against the dollar and teaming up against the dollar, also a major issue. There's so many different things that potentially can cause fear in somebody that doesn't have the knowledge and how to invest outside of investments that won't be affected by all that volatility, right? Things like precious metals. My precious metals taken off. I've allocated. I've got a store of wealth that's actually a huge yield play right now. There's a lot of ways you can invest where, with these investments, they don't care what's going on. They really don't care what's going on. And if you take these steps to educate and learn, you'll find that the fear of stepping out with and teaming up with others and learning and diversifying, it pays off. It pays off because you all of a sudden go to sleep at night realizing, look, my pie chart, man, I feel so much better because I got this piece in medical, this piece in legal with Patrick. I've got this piece in real estate, right? I've got these oil and gas part, right? Where right now oil and gas is cash flowing, but commercial real estate's down. Legal's doing fine. People always need healthcare. There's all these diversifications you can do where you can feel better about your portfolio at night time.
Let me ask you about that. That's a huge mindset shift, by the way. Going from like completely losing everything in, the early 2010s to now where you have such a pie that's diversified like that. Can you share with me a little bit about that personal journey? What was it like mentally going completely down like that? And then deciding not only to get up and keep going, because you kind of have to do that, but at the same time, you could have just went normal career path, 401k, some mutual funds here and there, and not have to really think about it. What was that like shift in your mind that made you say, okay, look, that wasn't the way it works. I'm going to go this way. I'm going to partner with people who actually know what they're doing a little bit better and diversify myself. What happened to you there?
Well, I learned early, right, when the subprime mortgage collapse happened, that you can't be in stock market and you can't just be in real estate because they can both collapse at the same time. And your 401k at the same time can take a huge hit. So I knew that I needed to do more, not just speculating in real estate, but investing in more asset classes that cash flow and are resilient. So that led me to existing properties, cash flowing, buying single family homes, renovating, refining them, and then holding and then repeating. I did a lot of that. That led me to larger apartment buildings where I'm a partner in a couple thousand apartments right now. And then from there, I realized, man, now I've got my stock allocations, but now real estate's way bigger than it should be. If you look at a lot of the pie charts, 20%, 25% is really the allocation of the high income earners and the wealthy of what they're at in real estate. So where do you go? What is that next asset class? And so that led me into energy, right? As a high income earner, that helped out a lot. I was able to get some ordinary income write-offs that were substantial, 80, 90%. That's pretty amazing, right? And so I did some, and I have some cash flow coming in from those. And at that point, it was like, man, okay, I don't really have the stomach for energy. It's a little too volatile for me. What are those next things that are recession resilient, non-correlated? They don't rely on the same fundamentals. That's what led me into the legal funding space, right? Because in attorneys, they're really busy in good times. When people are more litigious in bad times, They're really busy. So they just simply don't care. So it's that journey where you're looking at every day, like, how do I rebalance, right? How do I add a little bit, move some funds around here to where each time I make a step in the right direction, I feel more like I've got a portfolio like the hedge funds out there, like the sovereign funds and the endowments. I mean, these people are all about capital preservation and growth. Just model yourself after them, and it just takes some time. It takes some time to step into it.
Well, and I don't know how you were sleeping when you had developments going, but I know real estate investors, and there's always fires that they got to put out. There's always something, and then you throw the market into there. Like, it can really, really, I don't know. I mean, you have no hair like me, so you must have been going through around the same time. And that's years of I failed. I started to learn a little bit more. I went into this investment portfolio. I met a new group of people. And then years later, I do this next one. And that's a ton of experience that you already have. And you mentioned it already, passiveinvestingmastery.com. But I personally, as an investor, I don't have the time or willingness to really sit down and learn all of these fields, but I do want to get involved. So walk me through, if I go to passiveinvestingmastery.com or I want to work with you, Patrick, what does that look like?
Yeah, so on our homepage, we have if you're interested in our investments, we get them all three there right at the top. We have private credit and commercial real estate debt, a steady cash flow, high growth and yield and commercial acquisitions. Both of those are taking advantage of the best lending and buying opportunity in commercial real estate in my lifetime. It's amazing right now. It's like 2009 and 10 in residential this is the 2009 and 10 of commercial real estate. So those are there. And then legal funding. Now, elsewhere on our website, you scroll down or click on the link at the top is our Alternative Investing Mastery Series. Register for that. Jump on there. I mean, every 2 weeks we had Forex, we had laundromats, we've had gold mining, we've had technology metals, we've had parking lots, we've had just about every bourbon barrel cask investing, right? Or alcohol bev investing, which is also non-correlated resilient. We learned it's very steady. A lot of how to buy a plane for cash flow. We're having one on franchises next coming up. So many, and we have tax strategists and asset protection strategists and all these things. All these things you really want to know that I wish I knew. Every 2 weeks we bring on a panel of 3 or 4 people, and we spend a whole hour, half an hour drilling into it, and 15 minutes of 15 to 30 minutes of Q&A, and everybody gets to be heard and get their questions answered. And so if you jump on there, register for that Alternative Investing Mastery Series, set up a call with me. Like I said, even if you're not an accredited investor, I was once exactly where you're at. I give away the book. It's Lessons from Thought Leaders, passiveinvestingmastery.com/book, passiveinvestingmastery.com/book. And make sure you put the name of this podcast, Business Bros, because I don't give it away for free. You can download unless I know where you came from, right? So you can download the ebook, or a signed copy will be shipped to you. As long as you put the name where you came from in there, because we're not sending it to randoms. But at the end of the day, I challenge everybody to just go home and be like, there isn't a reason to live in fear in the world. There's always solutions to work through it. And if you're worried about your portfolio allocations, the stability, the resilience, you're watching the news, and there's legitimately so many crazy things going on right now. What can you do to build more resilience? What pieces of your pie can you add to try and make going to bed a little bit easier at night, and the rearview mirror a little bit more clear? Set up a call. Let's have a conversation. And if one of our investments not there, I'm sure I can get you pointed in the right direction. We have dozens and dozens and dozens, 50 plus different alts that we've dove in deep into on our platform. I can help you.
Ladies and gentlemen, passiveinvestingmastery.com, passiveinvestingmastery.com/book. Make sure you tell me you heard it on the Business Bros, and they're going to send you a book. Look, here's the bottom line. Anytime you want to do something in life, you always find people who've already successfully done it. And that's exactly what Patrick and his team are doing. I mean, think about it. Every 2 weeks, you get a panel of people that are experts in their field, and you get to hear about an investment strategy opportunity, ask questions. I mean, what more do you want when it comes to investing in an opportunity than to talk to the people who are experts in that space? And Patrick and his team are helping you get the ability to do that. And if you want to turn some pages and read about thought leaders who are already doing that, go to passiveinvestingmastery.com/book. Get yourself a copy with promo code Business Bros, and let's get that squared away. Patrick, Thank you very much for what you're doing. I really always love the fact that people are out here sharing, giving people education and experiences, because at the end of the day, what you know is going to give you that ability to take that next step. We're always fearing what we don't know. And if you're educating the people, all of a sudden that fear dissipates. And now you have a portfolio that looks like a nice, even pie. So you don't have to live in fear anymore. Any final thoughts before we head out?
No, I appreciate you having me, man. Love the energy of your podcast.
Appreciate it. All right, ladies and gents, one more time, passiveinvestingmastery.com is the website. There you're going to learn all kinds of stuff. If you want a copy of the book Thought Leaders, go to passiveinvestingmastery.com/book and make sure you enter Business Bros. Patrick, thank you very much for being on the program. Ladies and gentlemen, we'll catch you guys on the next one. Peace. And we're out.
It's over. Go home.
Is your business in need of marketing? Try starting a podcast, but not just any podcast. Podcast like a pro. We can show you how to take your business from being invisible to becoming a brand people trust. Go to www.businessbros.biz to get started today.